you do.
I think one way or the other, we tend to keep quiet about it. Okay, it's on now.
Right up the river.
Are we okay? We're good to go. Hi, folk. Welcome to the meeting, and it's our Audit, Risk and Finance Committee for the 17th of October. So look, firstly, many thanks to all of you for changing your schedules to be meeting on Thursday afternoon and not as planned on Wednesday. That helps me. It also reflects why Jan and I have asked for a deputy role, which will come up towards the end of the meeting, which is great. But I'd also like just to acknowledge, I'm sure you can see on the screen, an old friend of local government, Earl White from Bancorp. We'll hear from Earl pretty soon about life in the finance markets and how that affects us. So Earl, welcome to it, and thank you for being available as well. That's absolutely great. So
Pleasure.
look, meeting is relatively straightforward. I think it's good to get straight into it, and we'll see where we get to. Again, appreciation that you see me from a distance. In this case, out of interest, if you need to know, from Christchurch City Council, their 6th floor. Would folk join me, please, in the opening karakia, please? Kia ora te moana. Kia whakapapa punamo te moana. Kia mā tato e te rangi manae. Mai tato.
Tato katoa.
Sorry about that. It makes it's difficult when you're trying to say it and also be in time with you guys. There's a slight delay, but never mind, we're there. Thank you for that, and thank you for participating. Apologies. Do we have any apologies for the meeting? I think we're a full muster, aren't we, Amy? Well done. Look, we've got a... Sorry?
Karen Makita.
Oh, okay. Sorry. Yes. Thank you very much for raising Karen's name. The other thing is we're scheduled to go through to 5 o'clock. Can folks stay with us through until then? Great. Let's. I'll move from the chair that we accept Karen's apology. We have a seconder, please. Thank you.
Yeah.
Thank you, Martin. Appreciate that. That's great.
Second.
Whew, I was worried there for a moment. All those in favour, please say aye.
Aye.
Those against, it's carried. Are there any matters coming up on the agenda for which you need to note your interests? Don't think there would be, so that's fine. I don't know of any acknowledgements or tributes. I probably should ask, is there any key community person matter we should note, Martin? We're okay at this stage?
I just have one, Bruce, if that's okay.
Yep, go for it.
I just want to acknowledge the recent passing of Dick Smith, one of our Featherston residents of Long, who recently died. Dick served as a Vietnam vet and was instrumental in doing a lot of things towards our commemorative processes in Featherston. So sadly missed, and my heart goes out to his family. Thank you.
Thanks, Colin. Appreciate that. Yes, it's it reflects change, doesn't it? So sadness. Can we? I don't think, Amy, we've been notified of any public participation requested at this meeting.
No.
And is there any urgent business we need to attend to other than what's on the agenda? No, I don't think so.
Just the engagement letter, Bruce. Yeah.
Oh, okay.
The debenture trust deed. Engagement letter.
Okay. Sorry, you're quite right. You'll raise that as part of the finance item, will you, or do you deal with that separately, Charlie?
We need council to approve it as a late item onto the agenda, please.
Okay. I'll move
committee.
We take the engagement letter as a late item. Do I have a seconder, please? Thank you, Martin. I'll put the motion. All those in favour, please say aye.
Aye.
Those against, it's carried. So sorry, just thank you, Jan, for keeping me safe. G'day, Karen. When do we?
Good morning. Good
when do
afternoon,
you want to
guys.
deal with that?
It will come up as item 10.3 on the agenda.
Thank you. Just make note of that. That's brilliant. Okay, first item up is to confirm the minutes. Item 8, We have the minutes of our last meeting on the 14th. I'll move from the chair that taken as a true and correct record. Do I have somebody prepared to second that? Thank you, Martin. Is there any discussion, any matters of accuracy or correctness that we need to note? There being none, I'll put the motion. All those in favour, please say aye.
Aye.
Those against? It's carried. Thank you very much. There were a couple of items in there that I just noted. One dealing with a swimming pool audit inspection, and a very interesting paper coming up on that. And also, we were going to talk about a deputy role, and that's also subject to the agenda. So, as far as I can see, there is, apart from those two items, there are no other matters arising from our minutes or carried over. I think that would be fair. So,
Bruce.
yes, hi.
Bruce, I just have a question. We've got a couple of new people on the screen. I'd certainly like to know what their role is and how they're going to contribute towards our meeting. Thanks.
Oh, sorry, I introduced Earl before. Earl, do you want to shake your hand? Earl is our advisor, and he will talk to us about the Treasury position that we've reached. This is both investment and debts. Earl is from Bancorp. And I think fair to say, Earl, that you deal with North Island. Perhaps I should really invite you just to introduce yourself. My apologies to perhaps being too informal.
No problem. So, as I said, my name's Earl White. I work for Bancorp Treasury. We are heavily involved in the Treasury advisory area, and specifically we advise a number of councils in New Zealand, quite a large number of councils in New Zealand, and Bruce is aware of that with some of his other roles as well. I was previously involved with Far North with Janice, so when she came down to the Wairarapa, I managed to come with her, and our role is basically to assist you in managing your interest rate risk and your bank relationships, and and I work closely with Charlie on that on a daily, on a as required basis. We set up an initial plan a little while ago of what we were looking to achieve, and that to quote I think it was an All Black coach many years ago, or lots of people these days, we're on that journey, and at this stage, working pretty well. But yeah, I work closely with Janice and Charlie and the finance team to assist in all Treasury matters.
Thanks, Earl.
And the only other person I can see on the screen, Colin, is Karen, who I made the assumption you know. Did you know Karen, Colin?
Yeah, she was on the last meeting.
Hey, sorry.
Stephen, she was on the last meeting.
Oh, of course. Sorry, Karen. I'm getting old. I'm getting a little bit doddery at times there.
Karen, welcome to the meeting, Karen, again. Unfortunately for everybody, Karen is an old friend and face I know for many years. Karen, look, it would just be useful if you perhaps just reintroduce yourself to the committee, please.
Okay. Well, good afternoon, everyone. Thank you for inviting me to this committee again. I'm the appointed auditor for the South Wairarapa District Council audit. Currently, we're auditing the annual report, and I will have the great pleasure of auditing the long-term plan, working with the council next year. So later on, I know I have an agenda item to update you on where we're at with the annual report audit. So I will kind of lead my update for them. But just in terms of my background, I've been a long time local government auditor. I'm currently the auditor for Masterton, Carterton, Napier City Council and Wellington City Council as well.
Right.
Thanks, Karen. Again,
thank you.
To the meeting. It's always good to have you there. Look, out of interest, normal practice for your auditor to be invited to attend all meetings, albeit the relevance is heightened by us being right in the middle of what we call signing season, which, as everybody knows, getting the annual report through the process and Karen to put an independent opinion on. So that's tremendous. So welcome also to the meeting, Karen.
Thank you.
Okay, so look, if we can then move to item 10, which is the decision reports from Chief Executive and staff. Item 10.1 is the finance report. Thanks, Charlie.
Thank you. So this is our regular report on the financial position, and it is mostly as at August 2024, just due to the time constraints of when we had to release the papers. However, we've put our investment and borrowing summary at September 2024 because that's a much quicker thing to prepare for you. So that is at the end of the quarter. And as we couldn't do the rates arrears as at the end of the quarter, we prefer to report those to the next committee meeting because you get an inconsistent picture when you don't align them with instalment dates. So we've had that problem before of the picture looks too.
There's an allowance for it though, isn't there? I think.
Sorry.
Allowance for that, things.
Yeah, but when you've got the position there, but you
Yeah.
haven't got the charts that we usually do. So, but we do have the debtors. So summary is so far that we are in terms of operating revenue, very close to budget, just ever so slightly behind, and that is mostly in some grants, subsidies and donations, and the Waka Kotahi subsidies. Now that is going to continue throughout the year, that one, because we had a reduced amount of subsidy confirmed during the budget process. We do have further applications, I think, being considered for the remaining fund, so some of that may be picked up. And in terms of operating costs, we're slightly behind our program in water supply and wastewater. That's a timing position in terms of budget. The year-end forecasts are on budget at the moment.
Thanks, Charlie. Are there any questions folk would like to raise about the finance report before we move to the Treasury side and invite Earl to speak? Yes, Colin.
Through you, Mr. Chair. Just Charlie, in terms of rate arrears, this goes back a little bit. Are you seeing a pattern evolving with an increase in rate arrears?
We are seeing more people coming to us having trouble with payments.
Yep.
We have increased our repayment plans, so that's where we set up an agreed amount that someone can afford. It might not necessarily take them to a position of being cleared by year end,
right,
but at least it's an agreed way forwards for that ratepayer to keep making payments without being stung by penalties and interest.
Yep.
So those are great. It's always great to actually hear from our ratepayers when they're having trouble, and we do encourage them absolutely to do so. So just anecdotally, yes, we are seeing an increase in people approaching us for ways of payment.
And further to that, what about rating rebates? Are we seeing an uptake in?
Yep, rebates are strong.
Yeah.
And Charlie, if there's lack of cooperation on the person involved?
We take those through the process that we are allowed with them adding the arrears to their mortgage if they have one, and then taking legal action and potentially rating sale in the end. So, yeah.
But we haven't had to do that yet.
Not quite yet, no.
Quite yet.
Just on the sewers, the submissions back on those and the reports back from. That's the time I'm forgetting that, the house inspections and that kind of thing. We're in that.
We're sense checking the data at the moment, so the team are still engaged. They're just making sure that the information they've got is correct, and then we'll upload it to the system.
When will we see some results from that, Janice?
Probably another couple of weeks.
Within the next couple of weeks. Yeah.
When we're in a position, I'll make sure I send it out to everyone so that you know where we are.
Correct. Thank you.
Charlie, I just wondered a minor question. Look, I appreciate only 2 months in, and I suspect it's miles too early to bank it in any sense of the word. I do notice in some of the variance analysis, and I appreciate that it's reasonably simple but good analysis. There are some variances there which I think you might appear to me to be permanent rather than timing differences. And I'm talking about community buildings, parks and reserves, and actually it's around consultant and contractor work. Are those sorts of favourable budget variances under spends treated and banked in some way that we can use it elsewhere? Or is it too early in the year to say?
It's far too early in the year to say, I'm afraid. We
I
also,
can see you laughing
Yeah.
there, I think, actually,
Yeah.
Charlie. I appreciate it.
Yeah, it's quite early, yeah.
Find some pot of gold somewhere.
yeah, no, it's quite early, and I believe there's a lag in the annual inflationary increase in that contract as well. Some of those, it's usually confirmed just after the year begins, so.
Right, okay, yeah, okay. So false impression to think we might have a permanent saving, which is fine. I get that. That's absolutely no problem. And just with the debtors, you indicated, there are some risks around it. Is that debtor position before or after the first rate instalment? It'd be before, wouldn't it? Am I right?
No, these are non-rate debtors.
Okay, and you haven't given the rate status at all, correct?
No, because that would have been before.
Yeah,
the
no, that's your
instalment
point.
was
That's your
complete.
okay.
Yeah.
All good.
Yeah.
Thank you. Appreciate that. Okay. Any other questions or comments? Reasonably simple. And oh no, yes, Woody.
Yep.
Yeah. Page 17, contributions, roading and subdivision, favourable of 30K. Is that just because we haven't had many subdivisions being done, or is that?
Yes, yeah, it's just the timing of, it's hard to phase the budget correctly, and you don't know when those are going to be signed off.
And user levies are up, it says mainly due to rubbish bag sales, which sort of tells me whatever we're doing to diminish or minimise waste is probably not really working. That's a lot of rubbish bags.
That's what I look at.
Yeah. So is that like, when it says mainly by rubbish bags, is that like 90% of that, or?
I can't tell you off the top of.
I think you'll
Find out, but yeah.
I think you'll find the cost of rubbish bags has increased considerably.
Yeah, it's gone up, yeah.
Yes, so, yes. Time frame, I think.
As strange as it seems, rubbish bags can be quite a lumpy income because our supermarkets tend to come in and buy them in multiple boxes at a time. So it may just be that they have come in and asked for 10 boxes, and then over the next few months it will catch up on the budget. Yeah.
And then it's got total, page 19, it's total debt, 26.9 million. That's just year to date, is it?
The current portion is what will be maturing within the 12 months of the year, within the financial year. So it's just when we're expecting to make a transaction on that.
And we've got another question here on page 22, I think. There's Lake Ferry Paddock subdivision. What was that? 121,000.
I don't have anyone that knows that project at the table, I don't think, so I can't.
And then there's
Have to report.
Lake Ferry rental properties, Lake Ferry drainage as well. I was just wondering what that is.
Again, I'll have to report back to you on that because I'm not familiar with the myself.
Thank you for that. Are there any other questions on the finances? That's really helpful, Charlie. Thank you very much. Look, that gets us to the monthly Treasury report. Charlie, I'm open to either lead off some comments or we just invite Earl to pick up the pieces.
Yeah, I'll invite Earl to speak to that, please.
Okay, hello everybody,
Welcome again to the meeting.
Hi, thank you. So there's we prepare a monthly report which has got a bit of detail which you can read at your leisure, but I'll try and give you the highlights and in language that is, I won't try and bamboozle you with financial market language, but from a compliance point of view, we put in place a Treasury policy last year, which there's a picture on the first page of the report which shows compliance or at this stage non-compliance, although that it actually is not non-compliance, sorry, because there's discretion until debt is over $30 million. So what those interest rate risk management parameters do, it means that the council must have a certain amount of debt on a fixed rate basis. So, you know, the cost must be locked in, and that percentage required falls over time. And one of the main reasons there is that, you know, we want certainty in the short term with annual plans and things like that, but also as time goes on, the actual borrowing requirements and market changes and uncertainty increases. So in general terms, you know, the amount that you would want to have locked up decreases as the further forward we look. So at this stage, the council's got well, at the time of this report, the council had just over $22 million worth of debt, and approximately 10 million of that, or nearly half, matures in the first half of 2025. Now, that's been a conscious decision by us, the Treasury team of the council, because not surprisingly, with a outlook for interest rates to be falling, we don't want to be locking in long-term debt at high interest rates. You know, for example, 6 months ago, you know, 5-year, 7-year borrowings were 6% for the council, and now they're probably down at 4.5%, and they may fall a bit further yet. So the council's, and also we revamped the book so that rather than having borrowings and also investments, we've tried to get the book as a net book so that over time we will have borrowings, we will have some working capital requirements, and we'll have some short-term deposits in place for, there might be some reserves, but also just short-term capital management. But in general terms, we're trying to sort of minimise the risk of us borrowing off the bank and then giving it back to them at a lower rate and effectively paying them a spread. So that's well in train as well. So as I said, at the moment, the council's got about 22 million bucks worth of debt, and the all-up cost of that is 3.58%, or was at 30 September. And we're anticipating, and this may change, and obviously Charlie and I talk about this regularly. So we, in the plan, debt was projected to be around 40 million in June 25, and then with further planning and projections going forward, we'll get a steer for where debt's going over the next 3 or 5 years. But the council is very well placed to take advantage of this fall in interest rates we're seeing. And what that really means is that we would expect that your all-up cost of debt is going to continue to be around about that 4% level, all up, or even a little bit lower. So we see that that's in the bottom, in the top quartile of performance for councils. So your cost of debt is, you know, compared to much larger councils and your peers is very good, and we expect to be able to continue to deliver a cost of debt, you know, around those levels or lower. So the council's in good shape. We've got flexibility ahead of interest rate declines, and with the LGFA access available, and Charlie's doing a great job with the LGFA. We've got very good access. You know, the systems in place are great, and you know, the council can get funding within a few days on demand. You know, good shape. So your treasury area is in good shape, and your funding is in good shape. Early in the new year, we're going to look at your transactional banking costs and try and make some savings there. So it's all about trying to do things efficiently and at the lowest cost possible for the council, you know, within prudent risk management approach. So, you know, from our point of view, we see policy compliance, and we see solid, you know, counterparty credit limit controls tick. We're not investing with people we don't think we'll get the money back from, so we've got high quality investments, and you know, our funding risk is excellent. From a market point of view, I'll just give a quick sort of summation of where we see things, and then if there's any questions people can ask. But we had a pretty important piece of data out yesterday, which was inflation data for New Zealand for the last quarter. That came in at 0.6% and 2.2 for the year. Now that was lower than what the Reserve Bank expected when it cut rates in August. They didn't, when they cut the cash rate by 50 basis points a few weeks ago to 4.75, they didn't give an update of their projection on where they think the cash rate will be. That will happen next month when they do their final review for the year. Now, We anticipate they will cut by another 0.5% in November, so the cash rate will be 4.25% by Christmas, which is probably a reasonable Christmas present for a lot of households under pressure here in New Zealand. And we anticipate probably another 50 basis point cut in February, and they come back from their 3-month holiday, which is lucky for some. And that will take the cash rate down to 3.75. And we see the cash rate ultimately going down to around about sort of the low 3%. So that would imply council borrowing costs, term rates will be in the low fours, and short-term borrowing by the council will be in the 3s. So, that's why we're sort of reasonably comfortable that the council will have a cost of borrowing at 4 or better over the medium term. So that's our outlook for the interest rate market. We're fully into an easing cycle now, and we expect the Reserve Bank to move quite quickly to get that cash rate down towards where we see at the moment the terminal rate of 3% this cycle. It might go lower if things deteriorate further. Quite frankly, we hope that doesn't happen because the economy is very weak and we don't want it to weaken further. So when we look for the reasons why we think this cycle is going to be quite aggressive, it's because the domestic economy is very weak. Right across, we've got a client base, ranges from the big infrastructure guys like Auckland Airport, lines companies like Vector, exporters like Zespri, milk exporters, through to retailers like Briscoes and the Warehouse and people like that, and then lots of independent businesses, and as I say, a lot of councils. And across our client base, whether it's retail, whether it's manufacturing, whether it's infrastructure, things are tough. And that's reflected in the household budgets. And while interest rates are going to be a positive, interest rate decreases are going to certainly be a positive. We've got to remember that not everybody's got a mortgage, and quite a few people actually have funds on deposit, and their income's dropping as quickly as mortgage rates are dropping, probably quicker actually. So so it's a two-edged sword. But the main reason why we see pressure on households is this ongoing cost of living problems around non-tradable inflation. Yeah. And that's, we've all suffered this. Insurance costs, local authority costs, rates we're nearly 50% of the increase in inflation this quarter, because the rates have changed from last year. Now, we all know why that's happening, and there's not really an answer to sort of go a magic wand to stop councils having to do that. But the insurance sector especially hasn't decreased its increases in costs despite record profits. So we are seeing, and you can't escape those insurance payments. You can't escape your rate and payments. You can't. These are fixed costs. So the pressure is on households. So we think household spending is going to remain relatively weak for a while yet. So your rate payers are going to be under pressure for a while yet. So and that's one reason why we have to see interest rates fall quite quickly. From an international point of view, export prices are holding up quite well, or they're starting to improve. The milk sector is a bright spot. Fonterra is talking to pay out around $9.30, $9.50 if we're lucky, compared to under $8 this season. Beef prices are quite strong because of demand from the US, and lamb prices are improving, but they're still battling, quite frankly. Logs are weak. Kiwi fruit's doing quite well. So in general terms, our export sector, the low Kiwi dollar's at 60 cents, which is historically a low rate, but probably the new normal, quite frankly, given what's going on in the world. But the problem is that our export sector is still only about 30% of the economy, which it was 20 years ago. So while the export sector is doing what it can to help the domestic economy bounce back, it's quite a small, it's not big enough. We haven't got a big enough export sector. And that's one of the failures of New Zealand economy over a long period of time, is too much money into our houses, not enough money into building export growth. But that's the story for another day. But in general terms, that's why we think things are going to be slow for a while yet, and so that's interest rates have to come down, and the Reserve Bank is recognising that finally after not that long ago saying they didn't think the economy needed lower rates. So we're pretty comfortable rates are going lower, as I say, and we also think that the domestic economy's got a little bit of probably 6 to 12 months to get out of this yet, because interest rates are going to be a help, but they're not going to give us a silver bullet. If we look at internationally, as I said, China's still got this massive housing problem, an overhang. You know, to put it in perspective, there's nearly 60 million empty apartments in China, either empty or unfinished. 60 million, not 6 million, 60 million. And the scale of the problem means Bloomberg recently quoted that they'd probably need about 3 trillion. That's not billion, that's trillion. $3 trillion US to fix the problem. So China's got a long, slow move to fix this housing bubble that they've created over many years by spending on infrastructure and building housing. You know, a bubble that sounds familiar to many of us in New Zealand, I think, unfortunately. So that means that demand for our export products from China, while the volumes will hold up, there's still some pressure from pricing, right? So that's important to us. The good news from China is that they're looking to export quite aggressively. They're cutting their prices. So that's one of the reasons why inflation is lower here, because our cost of imports is falling, and then we have oil prices falling, which is a benefit. So the international outlook is also a bit problematical, and that's another reason why we think the New Zealand economy is going to take a while to recover. And then I haven't even mentioned what's happening in a couple of weeks. We've got the US election, and it's a knife edge. You know, latest analysis says that Trump is probably ahead, but it's really close. And at the end of the day, we will have quite probably have a situation where the Democrats will get the popular vote, but the way the Electoral College works in the US, Trump could be president because of those key states. So that adds a whole nother level of uncertainty into the global political landscape, because Trump's talking about tariffs and protectionism, and as an export nation at the bottom of the world, that's not good for us. So I'm trying to be positive, guys, but I think, you know, we've got to be prepared. We've got to be prepared that the next 12 months, you know, we're still going to have to batten down the hatches a bit and, you know, work hard to be efficient and get those cost of borrowings down, because, you know, your ratepayers are going to be still a bit grumpy for a while yet, because things are a bit tough, and, you know, it's going to be tough for the whole country, we think. So on that, unfortunately, not so happy note, if there's any questions, otherwise, you know, that's where we see things.
Thank you, Earl.
Turn that guy off, Amy.
Yes, could I ask a question?
Go for it, Kay.
Alex, I was sorry, I'm going right back to the boring, but yeah, that was pretty depressing. Thank you. But just, you did say that we had interest flexibility, good interest flexibility. You know, I didn't quite catch how we've achieved that.
So what we've done is we've shortened up the so as loans have matured over the last year or so, rather than extend those for say 5 or 10 years at 5 or 6%, we've borrowed short term at the same rate, and now we can go and lock them in for longer periods at 2% lower. So that's what we've done. It's like, you know, if your own mortgage, you go, I think rates might be going lower. Rather than borrow for 3 years, I'll borrow for 6 months, and then in 6 months' time I can borrow at a lower rate. You know, we've done the same thing.
And I think if I heard correctly, you're suggesting the Reserve Bank could have adjusted the OCR down twice before we have to renew in April with those $7.5 million, correct?
Yeah.
We suspect at least twice. Yeah.
At least twice, in which case that's what's the plan, I suppose. It also presumably reflects why, even though technically it's below the red line in terms of fixed interest, you're comfortable that we're in a reasonable position, Earl.
Absolutely. Yeah. We're you know, we think this is you know, it's prudent to have this kind of position going forward because of the circumstances surrounding. So the council's in good shape.
Yeah.
So that good crystal ball gazing.
Prudent risk management, you know.
Prudent risk management, yes.
Sorry.
Oh, look, Kay, can I just look for what it's worth, but I guess really as independent, the interest rate strategy that Earl is saying is relatively common around the local government, if I can say that. And I would even go as far as saying, Earl, that your competitor is generally advising in a pretty consistent and similar fashion, where I'm also seeing the strategy being, look, we need to look to be able to take advantage in our debt renewal and to keep our cost of funds down, which again, as Earl is saying is the name of the game. So, you know, I think we're in a reasonably, well, we're in a smart position, and it's one which actually I think is reasonably secure. So at this point, I'm comfortable. I want to bear in mind also, Kay, in terms of particularly that graph where, you know, sensibly we could be argued to be aggressive, we're still within our policy settings, which includes, I think you said above 30 million, and we're not there yet. So
Yeah.
there isn't actually a band to meet at this point.
No, exactly. That's just for information purposes.
Yeah, okay. Any other questions for Earl at this stage, guys? There being none, Earl, I'm going to say thank you. We do need to do some work on our motion, but firstly, thank you for that. It's, look, and my apology, I hadn't realised that you had not perhaps been formally introduced to my committee, but I'm glad they have now, and we'll still look forward to more of your presentations later on as we continue to meet. So thank you for that.
And I promise I am a cheerful person, and I'll be more cheerful. I just thought I'd, you know,
much.
what is it? Sort of promise low and deliver high. So next time
That's
I'll
right,
be chirpier,
right.
I promise.
Let's take it that way.
It's like a governor of Reserve Bank.
Oh, okay.
Thank you for that, Earl.
Thanks,
Look,
Earl.
we have a couple of recommendations, which is to receive Charlie's finance report. Thank you, Charlie, again for the regularity and clarity with which you bring it, and also which includes Earl's report, and also to note at this stage there's no significant tax risks have been identified. Do I have a person prepared to move that in second, please? Thank you, Martin. Do I have a seconder? Thank you, Martin. Thank you, Martins. I'll put the motion. All those in favour, please say aye.
Aye.
Those against? It's carried. Earl, you said to me, oh, Earl's gone. He said to me that his background was hiding the fact that he's actually on Waiheke Island, so I suspect he needs to get back to that beach, eh? Right, look, we have to deal with the additional paper.
We've got audit report.
Audit update.
Well, okay, and this additional paper, because it's coming from Karen as well, so I take your point. So let's do the audit update first. Karen, if you're still there, but Charlie, do you need to speak first before I invite Karen to make comment?
Yeah, just obviously with the timing of this committee meeting, we are very close to the end of our audit of the annual reports for 23-24. Just tying up some last things and looking forward to getting that clearance and the audit opinion on time.
Yeah.
Yes, absolutely.
First time for a long time.
Still on track for that. And then obviously we are planning for the audit of the long-term plan consultation document in February and the final document sort of May, June next year as well. So we've got a confident agreement from Karen that the resources have been planned in for that next year as well. So thank you again for that, Karen.
You're welcome.
Yep.
Right,
Thanks, Charlie.
Karen, thank you for that, Charlie. There's a lot happening there in a few short sentences, which I hear your point, particularly given an LTP, as well as planning further out. Karen, I think probably key thing is to, I mean, I'm happy to take comments on the total audit relationship, but I mean, obviously the key game in town at the moment is to get us to the 31st of August for adoption of the annual report. Would you give us an indication of where things are at, and are there any matters that we need to hear as a Risk and Finance Committee, please?
Okay. Thank you, Bruce, Chair. Maybe I can talk about the main focus areas for the audit and how those areas progressing. So first thing is that the council is now reporting under the public benefit entity tier 1 reporting requirements. Previously reported under tier 2, and the reason for the change is the council has now got expenditure in excess of $30 million. So in accordance with the accounting standards, it is preparing tier 1 accounts. What that means is Thankfully, Tier 1 and Tier 2 in terms of measurement and recognition roles are the same. However, Tier 1 requires more extensive disclosures in the annual report. So when you read through the annual report this time, you will see that the council has made more extensive disclosures where it's required to do so. The standard also requires entities when they move to a higher reporting standard is to show previous year's comparative, even though it was not required to report those disclosures last year. So the council has now made those disclosures, and we need to audit, obviously, the 2023 comparative retrospectively in addition to the 2024 numbers. Revaluation of assets. So the council is reevaluating in full its infrastructure assets this year. Those assets consist of roading and 3 water assets. This is quite a hot topic in the sector at the moment due to more rigorous accounting and auditing standards, but also the volatility in unit prices over the last little while, probably since 2018. They've not been very stable. There've been large volatility between councils, between regions, especially in relation to the unit prices for pipes, which make up a considerable chunk of the 3 water asset costs. And for roading, what makes up a huge chunk of the cost is foundations and pavements of the roads. So our approach to auditing both those classes of assets is consistent with what's happening in audits this year. It's to use an auditor's expert. Our auditor, we have engaged Brian Smith, or BJ as he is known, to provide us with advice. His role primarily is to review the revaluation reports, I guess look for anything that is unusual, or not expected. Plus, we specifically asked him to look at the unit prices. And this is to manage the risk that we're seeing across the sector where there is large volatility. Sorry, Charlie, I haven't had a chance to talk to you because it is hot off the press, but we have had Brian's broad overview already of his views of those revaluations. Generally speaking, he is comfortable with the overall valuation. There are some specific queries which he has, which we've put together with our own queries, and we will ask them of the valuer when we meet with them. The valuer is WSP. Tied in with that is because South Wairarapa uses Wellington Water to provide it with water services, and that means maintenance, operations, and they undertake capital projects as well. We have seen with Wellington City Council and the Hearts, I'm leaving Porora out of it because Audit New Zealand is not the auditor of Porora, so I'm not sure what's happening there. But we have seen significant cost escalation in those 3 councils, and so part of our work has been to compare and to understand South Wairarapa's unit pricing and where they sit in within councils, and how do they compare to the Hutt and Wellington City Council. So that aspect of the work is progressing. So we will be asking WSP, you know, how did they come up with the unit prices? We know, broadly speaking, it's a composite rate. What I mean by composite rate is we're not going to be able to take a water contract, look at the cost of the unit of the pipe and compare it to what WSP have put in their report, because they will include things like traffic management, planning and groundworks, contingency, an element of contingencies. And also they do some analysis across similar councils as well. So they can come up with a rate that is sustained. So it's not just a blip. That is because valuation standards and has that as a requirement. So you'll recall over COVID, we were asking about the impact of COVID-19 on unit rates and whether there was cost escalation due to lack of contractors. There were restraints on people being able to come into the country, and also limitations in supply. An emerging issue is the impact of climate change on asset values and useful lives. So going forward, the expectation is that valuers will need to take account of that when making those assessments. That's a lot to take in, so I can take any questions before I move on to the next area, if that would be helpful.
Oh, please, if you could. Sorry, I was trying to understand. So at the moment, you're looking at our unit prices. Is that to see if our procurement process is correct, or
No.
no?
No, it's to see whether the value of the assets that has been assessed are accurate and reliable.
Ah, okay. So retrospective. Yeah. Okay. Thank you.
Thank you. Thank you for that. Procurement does have a huge factor in it, though, because it's an enabler. Obviously, if you can, if your procurement is better, then you'll probably get more favourable rates.
Yes. Yes. Exactly.
Yeah. So it's an efficiency lens. So it's a very good related question.
Karen, can I just ask a quick question? Because revaluation will ultimately have an impact on the way that we depreciate our assets too, or not, which is something that we fund, obviously. So bearing in mind that, and probably it's a conversation we need to have around the LTP about depreciation across the board, to be quite honest, because it is a very large pot of money that we actually put aside each year for depreciation. So I guess that the right time to have that conversation would be during our LTP. Would that be correct?
Oh, yes. And even now, the valuers forecast the depreciation, which is why we look very closely at and challenge the assumptions around unit rates, useful economic lives, and condition of assets. Because they all feed into the depreciation number, and they're highly sensitive because they're big numbers we're talking about.
Yeah. No, thanks for that.
And of course, depreciation hopefully is fully funded unless good reason not to, and therefore is an element in determining rate levels.
Absolutely.
Yeah. Very yeah, a very key component.
Thank you.
Thank you.
I would think, Colin, if I could add my tuppence worth to that, it's not just that it is that you're funding the depreciation, but it's also indicative of what the infrastructure strategy should be in terms of reinvestment back in the assets. And there's the argument for the value of the valuation process that local government uses for these specialised assets, which is, current cost or replacement cost, not some historic cost. Because we're always going to have to be funding the replacement of this asset, not its historic cost.
Yes.
Karen, that's very
Bruce,
helpful.
can I just drill down on that just for 2 seconds, if you wouldn't mind, because it's it is important, because we have a pool of funding for depreciation that we use obviously to replace the asset at the end of its economic life. But when we go to fund that, when we go to replace that asset, the money we set aside for funding the replacement cost is only a minuscule amount compared to what the actual cost of replacement of the asset is. Is that not a fair assumption?
Yes, well, it depends how well integrated your asset planning is with your funding cycles. And that in itself is a possibly a financial management workshop.
Yeah, no, I totally agree. Yep.
Because if you take an initial investment in an asset, probably your depreciation, which can go towards meeting the capital cost, would actually be probably paying down debt. So it's actually a whole of cycle view you have to take and then matching your funding and financing policies with that, which includes use of that depreciation.
No, thanks for that.
But one of the things, Colin, that is really valuable, even about the exercise with this annual report, is that once we've got it through Karen and the external audit, is the analysis and the value that exactly what you're focusing on is there for, which is actually what is our current depreciation based on the current replacement cost of our assets. And that forms a solid base for thinking about your enhanced annual long-term plan.
Long-term plan, yeah.
So we've got that. So that's really valuable. Then you've got to have the discussion about what is the funding and financing policies that you bring to it.
Wonderful.
Karen,
thanks, Bruce.
The obvious question to come out of this is that's still a bit to go with WSP. This is all still manageable by the date we need to adopt the annual report.
Oh, that's the plan, Bruce. The auditor, use of auditor expert has been great actually, because this such person is doing, BJ is doing work on a number of councils, let alone being the auditor's expert, but he's well cited on some 40 council rates. So what it's enabled us to do is just to grip it up, speed it up quickly in the areas where there is significant audit risk and could cause delays. So we're jumping on this, Bruce. It's fair to say due to just the resourcing thing, we only started the revaluations of the Roading and Three Waters this week, but we've caught up quickly and we are planning to meet with WSP next week to kind of grip it up. The other areas we've been working on is fair value assessment of land and buildings that was completed by the council. We are seeking corroborative evidence for the assumptions and the indices and values that have been made. DIA mandatory measures for the Three Waters. So the council would have been in touch with Wellington Water to get the information it needs for its annual report. My understanding is the Wellington Water audit opinion has yet to be signed. However, they have provided preliminary information to the council, which will need may need updating once they receive that final information. So while the council may have received actual performance against targeted information, some of their variance explanations where there are significant variances between actuals and target may be still to come. And also with the non-financial reporting standard, FRS 48 being new last year, this year it's kind of an area of emphasis as well to make sure entities fully embed that standard. We have noticed, just based on central government clients, so these are government departments and Crown entities, the one thing that entities needed to have done is to include, where there are new performance measures, the comparative for the previous year, unless there are valid reasons not to do so. So the default is must include comparative information. With the council reporting against its last year of the long-term plan, there is reduced risk, of course, in the local government sector that there'll be new performance measures, that it needs to retrospectively include the comparative as well. So that are the main areas. One thing that OAG did notice in last year's annual reports, when it was gathering information to their report to Parliament on local government audits, was that the financial prudence benchmarks were not followed by many councils. So some that they looked at, the councils took liberties in terms of what they included in those benchmarks, but so we've been reminded as auditors to remind councils that those benchmarks are derivatives of the financial statements, and there are very exact rules that they have to comply with. So you can't take liberties in terms of, oh, I don't like this impairment figure, I think I will leave it out. When I say don't like, you might not like what it's doing to the graph, so you think it's a bit of a blip and leave it out. That's a big no-no.
Karen, can I just underline that with the fact that that's not something that was noticed in our benchmarks, that wasn't raised in the management report for audit last year, so I wouldn't expect that to be a problem this year either. Obviously, that work is to be done next week, but I wouldn't expect that to be a problem.
Yeah. So Charlie, what happened was actually some auditors didn't notice it was a problem as well. So it was very much a reminder to auditors more than anything else also that, please pay attention to this area when auditing that information.
Excellent. We look forward to talking to you about that next week when that happens.
Yeah, sure thing. Thank you.
Thanks, Karen. Are there any other questions for Karen at this stage? So look, I think the thing that I'm just keen to understand between you and Charlie, we have got a plan, and it's now down to matters of days, if not hours, to get this through the process, because the meeting is on the 30th, am I correct? 31st, Charlie?
30th, yeah.
30th.
So, that needs the audit completed, that needs the letter of rep identified for Jan and Martin to sign. Obviously, the opinion at this stage, even though we're running reasonably tight, most audits are, as we're running reasonably, it's not a putting down comment, I'm just saying it's a sign of the season. At this stage, there's nothing overtly or obviously a hurdle there at the moment that's going to stop that. I mean, I know you've got a big piece of work to WSP around rates, but at this stage, you're just saying we've got to go through the process. You're not saying that actually we are at risk, right?
So, I mean, it's fair to say there is some risk, but we are going as fast as we can. We are certainly communicating with Charlie and her team. We have received very good cooperation, and everyone we've come across as very friendly and keen to help us and very responsive. So I feel, you know, there is a good working relationship. The plan is, of course, absolutely complete everything within a timely manner, no surprises. I do have to say with the 3 water stuff, because it's related to Wellington Water and we're seeking to understand why, you know, the unit price and whether it's comparative and the reasons for any differences, we're hoping that won't take longer, which is why, you know, we got the auditor's expert onto it ASAP. But, you know, I'll keep you appraised. There's a few councils at the moment that are going through or will be opinion review committees. So, you know, we watching the results of that with kind of bated breath as well.
So this is code for saying your ones you mentioned, Wellington and the huts are going through an opinion review committee in front of us.
They are, Bruce. So my plan was, in fact, to take, if I could manage it, South Wairarapa through the same opinion review committee tomorrow. But we haven't done sufficient work, but I will be attending that committee in more than an observer role. So I will be talking about Wellington City Council, where we have done more work on this. And currently the relativity of South Wairarapa's unit rates compared to those councils. So currently what we're seeing is South Wairarapa rates are lower. So therefore whether it's higher or lower, just because they are significantly different, we will still be seeking to understand why. So the audit team at the moment, in particular, the audit supervisor, Ian, I've asked him to try have that conversation with the water team here sooner rather than later, just to ask if they are cited on the outcome of the revaluation, and are the unit rates being cited consistent with their understanding and what they are seeing in the contracts.
Thanks, Karen. I note that I had an email from Sue at Wellington Water just earlier that they're actually meeting at 3 o'clock today with your audit team. So right now they're discussing that. So hopefully that won't delay us at all. And we'll certainly, if you do encounter any delays or slowness from them, please do get in touch and we can push that along.
That'll be really, that's really good to know, Charlie, because in fact, I have seen the memo provided by Wellington Water to the hut, and that has also now been provided to Wellington City Council, because the whole point is, you know, everyone trying to get on the same page and get their audits completed. So yeah, I think the kind of cooperation has been very good in that area. Wellington Water have been very keen to help. They have also been sharing with us the work done by GHD, independent review of Wellington Water rates, unit rates, because they keep a register of rates, obviously. So it's about kind of joining all the moving parts. So why we started later, I feel that it has had some benefits, kind of riding on the shirt tail of others and just being, you know, keeping close to what's going on and the results of that?
Yep, thank you very much.
Thank you.
Thank you for that, Karen. And it's not a snarky comment, but I mean, at this stage, a no surprises policy means any problem is a surprise because there's limited runway. That's the only problem to deal with.
Yeah,
So
that's the problem.
could I ask that you appreciate that you're at the AUK tomorrow? Could you please let Charlie know the outcome of that AUK as an indicator of how it could affect the position that we're in? Because I mean, you're essentially saying there is some risk around the valuation we're currently we have in our draft report, which which is code for there is an opinion issue here potentially. Okay,
Yeah,
look, that's good. So yes, still got the plan to get there by 30 October. There's a bit of headwind over the valuation. If you can keep Charlie and obviously Janice informed, they can let us obviously know what the story is. That would be great. So thank you for that.
Yep,
Charlie,
absolutely.
I think members, that's got me understanding where things are. Is there any other question on this paper at this stage? Charlie, I'm going to look to go towards the motion, but can I just pass on my gratitude to you personally and your colleagues? I'm hearing good noises from Karen here about cooperation. I attended your briefing last week on the annual results, and I'm deeply appreciative for what I've been able to see happening at South Wairarapa this year, which I suspect is down to a good lot of hard work by you. So I just need to pause.
You're welcome. Thank you.
Say thank you for that. And of course, comes with the right to keep it up.
Thank you.
Thanks, Charlie.
Yeah.
But thank you very much, Charlie. I do appreciate that. So
Excellent.
I'm going to move that we receive your update report. Do I have a seconder, please? Thank you, Colin. I think your hand's up. Is that right?
Yep.
Put the motion.
Thank
All those
you.
in favour, please say aye.
Aye.
Those against? It's carried. Thank you very much. Well, I was trying to get to 10.3 super fast, wasn't I? But we are now up to 10.3, dealing with the debenture trustee. Charlie, do you need to introduce this?
Yes,
Please.
certainly. So this is a supplementary engagement each year with Audit New Zealand and our trustees in terms of clarifying the it's called debenture trust. It's essentially some covenants and rules around the net debt levels. So we are essentially asking the committee to authorise the mayor to sign this engagement agreement.
Right. Is there a need of any explanation about what actually this has happened every year for a while?
Yeah.
But is there any question of clarification about what either the debenture deed is from anybody? Members, it's not a problem to ask perhaps a clarifying question. I was about to say a dumb one. I don't mean it in that sense, but you're certainly welcome to do it. Yes, Martin.
Yeah, if it's a brief explanation.
Yeah.
Yes, certainly. So each year we provide some statistics as around our debts, investments in relation to revenue and our covenants around that and whether we've met those. And we have trustees, so they're called trustees and execs is our trustees. And audit are engaged to check those in addition to our annual audit.
So just for clarity, they manage the debenture trustee. If we are in breach of our responsibilities for repaying debt, they can act as us to do the necessary recovery to collect the debt that we owe them.
Who's our trustees?
Trustees.
It's the executives.
Trustees.
Yep. It's confusing to be,
Yeah.
but yeah.
Yeah. I see Martin.
And this is,
Yes.
Yeah.
it's a common process, the standard letter. Most councils, I think there's one or two agents that act in this space, and trustee executives is one of them. I'm familiar with from North as well.
Very good.
So we just took the opportunity of this committee meeting to formalise that authorisation of the mayor's signature on the engagement.
I'm happy to move in that direction.
Thank you, Colin. Thank you, Kay. I'll put the motion, all those in, so this is authorising you, Martin, to sign. I put the motion, all those in favour, please say aye.
Aye.
Those against? It's carried. Thank you very much.
Thank
Righty. So that gets us to the end of section 10, if I'm up to date and haven't got either in advance or behind, which gets us to the information reports. The first one, hello Charlie, is review of accounting policies for the LTP.
Yep, so just introducing that, as you know, we're in an LTP year and we do review our accounting policies. Many of those are aligned with long-term plan deadlines because they have an impact on the strategies that you put into your long-term plan. So even though we adopted our revenue and financing policy in June and the related remission and postponement policies, we are, as you know, looking at doing a review on those and slight changes. So even though those are not due until June 27, we will be reviewing those. And then we also have the development contributions and financial contributions policy. Now, because the district plan has not yet been adopted, we didn't we didn't review that policy last year when we might have. So we're working on that now with a line to adopt that. And then your financial management policies, we'll look at those as well so that we can get those in line. Because otherwise, if we wait till the next long-term plan, they'll be overdue.
Right.
Those will be brought to you as part of a workshop. Other than the rating ones, I don't consider those to be too time consuming. They're mostly just explaining what they do and how they enable our long-term plan.
You wouldn't imagine much change in those policies anyway, would you?
Not the things like the fraud and corruption.
Yeah.
We did a lot of work on financial delegations. The discretionary expenditure policy was only just adopted as well, so we'll probably leave that one until the next long-term plan. And the tax governance framework, again, that's a new one, so that will probably be, we always look at it and review it, but unless there's anything that is considered pressing, we'll leave that one till its next review date. Yep. Mm-hmm.
Cool.
Brilliant. Any other questions or comments? No, there being none. Thank you, Charlie. If we just move to the resolution, which is, I always lose my resolution.
It's just an information.
Information
report.
only.
Well, don't we move? Sorry, I was assuming we would move to receive the report. Okay, that's fine. I'll receive that.
Yeah.
Insurance update.
Me again. So as you've heard from Earl, and it's no surprise to you all, insurance premiums are our far and away our biggest inflationary factor now that things like infrastructure consumables have settled down a bit. We have in our assumptions, we have allowed a different inflationary rate for insurance, and that will be part of what I get Karen's team to check in their audit next year, because generally as a rule we stick with the Bell inflationary indicators unless there's a contractual obligation to a different inflation rate. So say you've got a different one baked into a multi-year contract for service, then you would use that rate. With insurance, it would be imprudent of us to use the Bell inflation rates when we know that inflation on insurance premiums is much higher than that. So we have had advice, albeit very informal, they don't like committing pen to paper on these matters from our brokers as to what those likely increases are going to be. So,
Charlie, are we still sharing our insurance liability with one broker across the Wairarapa region? The same.
We are, and we are looking to work together on whether we want to do a test the market and see whether there's potential. Yeah, collectively again, does make sense for us to ensure as a three council group, we do get a bit more buying power that way.
And I guess my other question is that we probably have a number of assets that probably are not worth insuring in the future that we probably cover. Is that something we'd look at?
We did do a change just before we adopted the annual plan of removing some assets that were under $50,000. But we always encourage council's direction on are there any further movements that they want to make on those, bearing in mind that removing small value assets doesn't actually have that much impact on your insurance. At this point, you'd be looking at needing to do something quite dramatic, like going away from insurance as a traditional means and doing self-insurance. And we don't have airport shares to fund anything like that. Even if you did vote for it.
So is that something we could consider in the future, is in terms of self-insurance? Because collectively, what we pay in premiums, the three councils in the Wairarapa alone, you know, that's a sizable chunk of cash.
There are schemes that you can enter into which are investment type schemes, from which the proceeds are ring fenced for claims on damage on those assets. You have to set it up quite carefully and ensure that you have the intent there from the beginning. And those are worth looking at. They're always worth looking at. The thing that has happened new in the last couple of years is the movement is less so on material property insurance and indemnity, professional indemnity and liability are becoming much harder to place. And we certainly had our limits significantly decreased last year when we went to replace the insurance. And that is down to claims in other councils around the country, making insurers a little bit more cautious on what they cover.
Excellent, thank you.
And the only way to give our insurers certainty around that is to show them how our practices and procedures reduce our risk in that area. That's always a good thing to do. Yeah.
Cool.
Look, I would be keen to look at this at a stronger strategic level in the way that you're talking about, Charlie. Obviously, for next year, there are some differing commentary around the sector. For instance, elsewhere, through some of the collective arrangements, the market has actually softened and the rates actually haven't moved significantly on last year. And I know you say here they're rising significantly for us. So some gains have been achieved elsewhere. And in fact, the majority of the increase, particularly this is material damage, has come around increased valuations, which of course we've been talking about with Karen, in effect, albeit, you know, they aren't necessarily insurance valuations, but they are changing clearly. The other thing is that there is a very real difference between some of the brokers between the ease and the price and indeed the quality of the cover on statutory and public liability. So there is good reason for us to review this, because I guess our renewal year is what, 1 November?
No, 1 July, unfortunately.
Oh, 1 July. Oh, so we've got a bit of time to go. I mean, look, again, for those that have approached this with a level of strategy, and I'm sorry, I'm not suggesting you are, because you're actually saying let's do the strategy. It can be a couple of years process at the least. So, look, I'd invite you to share some of your good thinking with us further in terms of actually what does that strategy look like to reach a new consensus around insurance, because as I think Earl said in his presentation, one of the lumpy items which is important, you know, in a sense is important, committed inflation we can't avoid is insurance. So our actual posture around the insurance and risk and who takes the risk is really important for us. So thank you for that. Any other question? Rightio, well, we'll take that on advice. Thank you very much for that. So that gets us to the risk management update, please. Paul or Amy?
Matt is going to speak to this report,
righty,
and Paul and Rob are away today.
Okay, radio Matt. Welcome to the meeting, and Charlie, you can have a well-earned rest. Thank you.
Chair,
Okay.
so I won't talk the whole report. The risk register has undergone a significant review, changes since the last meeting. Each risk now has its own individual page, which you can see in the papers, and some quick referencing as part of that. There's been an expansion on treatment plans, and they split out in climate management and risk.
Thank you,
Sorry.
Matt. I must confess I found it hard to hear you entirely there, Matt. But
I'll swap over. Sorry, yeah. Oh, yes, got a bit tangled. Yeah, I was just going to move the mic down.
Oh, thanks, Amy. That's really helpful. Sorry, Matt. If you could perhaps, for the benefit of those of us online, just sort of semi-repeat what you said, that'd be really helpful, please.
No worries. Can you hear me now, Chair?
I can hear you much better now. Thank you. Thank you, Amy.
Wonderful. Cool. So the risk register has undergone significant review and changes since the last meeting to ensure that information is accessible and presented in a way that supports engagement and discussion. So each risk has now got its own individual page and summary at the beginning, and key information to support readers looking for updates and a quick reference as part of that. Treatment plans are in place for each significant risk and have been expanded with more details to support discussion. And a key change to the register this quarter is that the crisis management and response risks have been split up. So historically, that was just a bit of a catch-all that was referring to local crises, which are relatively frequent, but also large-scale issues and emergencies, which are obviously less frequent. So we've split that up to be more reflective. And that's basically the summary. And if anyone's got any specific questions, I'm more than happy to field those.
Yeah.
You guys. Yeah, so crisis management is an interesting area, and I'm just wondering, localised as against sort of more significant regionalised, you know, does that form part of REMO in terms of managing the overall impact of that? And what's our role? I guess we are members of REMO. REMO is staffed accordingly, but our role specifically in the South Wairarapa, and perhaps you might want to elaborate a little bit on that. I don't know if the.
Can we wait until 11.7 on the agenda?
Oh,
We've got another paper later on.
I'm quite happy to do that. Yeah. That's good. So thank you.
Judy.
No, duty before.
I would wait.
Whatever, everything.
Hand symbol. Okay. So number one, the relationships that iwi Hapu and Maori, I think that is all good, but I just think there's a bit of an elephant in the room in terms of the counter side, where I was just thinking of like the Three Waters co-governance, when there was a strong reaction against us trying to meet the obligations of the treaty. That's a risk, and in terms of fulfilling this, that because there's quite a split in the community about the views.
Absolutely, I think that's probably some really useful feedback to incorporate into that risk, and a specific example of some challenge in the past that we can use to go, actually, how do we approach this differently moving forwards? Make sure we repair those relationships.
Yeah,
treaty moving forwards.
It comes a bit down to communication and stuff like that.
I guess sorry, I was to see your hand up.
No, but you go first.
Mine was actually it relates to this paper, but it might not sit in here, but as my concerns after the meeting we had yesterday regarding Payne Farm as being potential risk for us in terms of costs, legal costs, and any financial outcomes from those decisions that get made around that. Are we in the right space for that discussion, or is that further on in the paper as well?
It's not a discussion that we would want to have at this meeting at this time until we've worked through the options we discussed yesterday.
Yep.
Bearing in mind, legal privilege exists over the advice you were given.
Yeah, but
it will make its way here eventually.
Yeah, okay. That's kind of thank you.
Matt, sorry, Martin, I think you were next, weren't you?
Yes, thanks, Bruce, if I'm allowed. Yeah, I do have, if you like, the same problem with this document that I've had for some time, which is if I look at the risk around emergency management and response, which has got a residual score of 4, which I'm not 100% sure what it means, and a risk of a residual risk of medium, where my own view is that at some time in the future, the need for an emergency management response is actually 100%. The only thing we don't know is the extent of it and the when of it, or where. But having said that, here is an item which seems to rank down the list. And I get regular emails from various people telling me what is going on that helps mitigate that risk, which is all good. Meanwhile, at the top of our list, we've got climate change, which is residual 12, residual risk high. And yet I don't recall receiving any information in a very long time that says what it is that we are doing to address the risk, or whether it's got worse or it's got less. And therefore, I think from a credibility point of view, it's hard to say that is a risk that we actually take seriously, because we're not doing anything. If you actually think in your own lives about something that you know is a risk, for example, you're halfway to the next town and you suddenly feel a problem in one of your tyres, you get out, you take a look and you see a big bulge. You know you've got a tyre problem, but you've got to get to the next town to get it fixed. Well, now you start driving slowly, you do regular little checks to see whether it's got worse or not. You will respond to that in some way. And yet, I don't think we are. Ditto, I'm not sure that we're actually doing anything really that with any of the red items that would cause somebody else to look at us and say, my gosh, those people really do think that's a risk, because they are looking at this, checking that, safeguarding this, ensuring against that, preventing this, etc., etc.
Yeah, happy to come in through you, Chair. So just in terms of the scoring, particularly around the emergency management one, this is a agreed risk framework that Council has adopted. So 1 to 4 based on frequency, 1 to 4 based on severity. An emergency response is unlikely, so it will happen in due course, but most things will happen in due course. So during the, a time frame yet to be determined, it is unlikely we will have a major response. These are things like tsunami, earthquake, significant flood, COVID, etc. So the reason for that is the frequency of that would be a 1, because it is very unlikely. The crisis, which we get relatively frequently in terms of minor flooding or the Remataka Hill is closed or whatever, that obviously has a slightly higher chance of happening, but a less severe impact. The residual score of this is basically based all off impact and severity. So again, it's a 1 to 4 threshold. That threshold, I think, for 4 is a $250,000, I think, impact to the council or its services. Whatever we do in this space, if there is a large earthquake, we will go over that. So therefore, the residual risk on emergency management will always be a 4 due to our risk framework. Our risk framework obviously has to deal with a broad array of services and risks. And that is from, standard IT services or whatever to a huge event. And therefore, it doesn't greatly capture every minutiae between the different kind of scale and impacts. So what I would say is, in terms of the emergency management response, and we'll talk on this a little bit more later with some of the other papers, focusing from a risk perspective, that's why that one scores a 4. Is the chance of it happening is very rare, but will eventually, and then it's very severe if and when it happens. But we still undertake a lot of mitigation as part of that. In terms of climate change, I can't speak for that one. It doesn't sit within my area, but if the committee paper on that, I presume that's something we can.
There is work coming in the new year on climate change. So Sky Halford's preparing some work to bring to council in the new year, I believe, on climate change.
How does climate change end up at 12 if emergencies like flooding and that supply
Cyclones.
like climate change, but they're only at 4.
So I suspect because climate change is here and now, the frequency will therefore be a 3 or a 4. So that it is happening now, the events are getting more frequent, etc. That filters down to our crisis function, which has localised flooding. That probably has increased over the last 10 years in terms of frequency. Historically, maybe it was a 2, that's a 3. Climate change from a frequency perspective is here and now. So you're really dealing with 3 or 4. In terms of the impact we're having, that funnels down a range of things in terms of cost to insurance, cost of flooding, cost of mitigation, cost of all the preparation we have to do as a response. So you can see probably why it's there. I must say I'm not deep into the detail in terms of our climate change policy, but something that's come into the committee in due course, that will be an opportunity to interrogate that.
I like your analogy, Martin. And I think this is something that will be good to explore with Matt, which, if I was to put it back in risk language, is if these risks are real, we will devote attention and resources to mitigating them. And I think you're saying, are we really taking that risk assessment seriously? So I think it's a very meritorious point to keep in mind as we look at this. And I mean, I hate to say it, you've asked a really tough one about climate change. So I think, Matt, we do need to keep this sort of idea in mind. What are we trying to achieve? How are they affected by these strategies? Are we actually devoting management attention and appropriately resourcing that? I noticed there's 1 or 2 here, like critical asset failure, where you're going to have to address in the LTP. Are we putting the right resources into this, which is useful. One comment I had was around strategic risk 5. Actually, look, can I start? Firstly, can I say, great to have all this, somebody's done a lot of work, and I take it it's you, Matt, it's and ELT, it's tremendous to have all these additional features. This is really starting to give us powerful information, which is tremendous. But I've looked at strategic risk 5, for instance, on page 49 of our agenda. Which is about financial accountability, and in essence, if I look at it, it's a really important one to us, given the legacy that we have, given the challenges of being a small council. I actually think, and perhaps I was looking more for the emphasis, you might say it is in there, but actually it's more around we actually have a credible and an aligned financial strategy with our position, and that we can keep that financial strategy. And I'm not necessarily certain that I would get that low at the moment. So I'm just wondering about the orientation of this one. I don't know whether you'd have any response, Charlie. I'm sorry to be on your case today. But maybe you have a comment on this one as well. I don't know whether anybody had any thoughts.
I mean, it certainly has an impact on our insurance costs and things, so it is a risk worth looking at. But I'd agree with Janice that we've got work coming up in the early next year to look at.
Yeah, exactly. I mean, look, I appreciate that. It's going to come with the enhanced annual plan. I think what I was looking for here, Charlie, was in terms of risk description. And I mean, it's called financial accountability, which is fine. I actually think our biggest financial related risk is actually probably sustainability, and the evidence is going to be around a credible financial strategy. Because I'm very, I'm comfortable that if I think about systems and processes, we just had the conversation around the annual report. You guys are doing good work. That's low. But I don't know whether that's actually really addressing the real financial risk that we have. Sorry, the real strategic risk that we have. Is really
there's 2 aspects to it. One is having those the accountability, the good background in our strategies and our documentation, a good working relationship with Audit New Zealand. But actually, one of the ways that we can improve this risk is regular communication with our community, and getting better at communicating our finances with the community. reputational risk implies someone listening to and watching your financial accountability. And I believe that these quarterly meetings have become a lot more professionalised. We're having the information reports that perhaps weren't happening in the past. We have tax governance strategy that we've never had in the past. So we are making improvements on this all the time, but without communicating that to our community, it doesn't mean so much to them. So we do need to get out there and communicate with them.
Matt, my attention was piqued by, I think, the next one, which is strategic risk 6, which is government reforms. And despite my involvement, it's not one that directly we're involved in Wairarapa. Sorry, I am in South Wairarapa, or indeed at Wellington, which was clearly, obviously, the regional deliver water services. There's actually meant to be a briefing today. Do you know? Did that happen? Do you know what's in it?
Which one?
Yeah, there's if you look on page 51, workshop underway, final reports due to be presented in a public workshop on 17 October,
Yep.
which coincidentally is today.
Yes, it happened this morning.
We had it, yes.
It happened this morning.
Right, okay. Great.
It was an update from the Wellington Regional Programme team and the Wairarapa Tararua Programme team on the information that we've gathered to date.
Right, okay. So it is progressing things on, and some progress was progress, I suppose. But yes, okay. I mean, anything in particular? Does that information, which is largely put down here as more work that helps manage the risk, is that helping manage our risk here?
We're moving towards our legislative compliance date, and that's all we can do. We have a decision, or council has a decision to make as to whether they stay regional or go local. That decision is approaching.
Yep.
So at the moment, we're just trying to share as much information as we can to enable the elected officials to make a decision based on complete, or as complete as we can, information at this point.
There was a very, very informative report presented by our team that was most impressive.
Yep, and it wasn't public too, Bruce, so it wasn't as if it was behind closed doors.
So you can watch it, can't you? I think you should. It's very, very good if you're worried about risk, managing risk.
But it was PX. Is it now public?
Yeah, it was a public workshop. It was a public workshop.
I can talk about, your point as well, mate. I can talk about this later outside the meeting, so I don't need to hold us up over that.
Mm-hmm.
Look, that's fine. So, Matt, from my perspective, thank you very much. This really has moved things on, although I am very conscious, really, of Martin, your critique. So is it driving, are we driving risk management? Are we devoting the resources and the action that goes with it? There'll be, I think, I agree with you, Martin, should be an increased focus on where we're going. Any other comments or questions on this very good paper? No? Well, that's great. Well, Matt, thank you for that. Appreciate the work. This is really starting to help us turn the wheels, and I will be keen that actually we devote more time to this actually as we move on. So that's really
Bruce, can I just ask a quick question before we move on? Is that just where does our residents' perception survey fit into this risk analysis?
I don't know that it does.
I mean, it does, because we're talking about reputation.
It's one piece of information. We will bring that back with some ideas around an action plan at some point in the not too far distant future. But it's not a risk in its own right.
So correct me if I'm wrong, but that was sent out to councillors on the 25th of September.
It was,
Yep.
And it's still in draft form at this point.
So it's still in draft, is it? So when you say it's in draft, what needs to be changed? I mean, it's quite clear it's a resident's perception. And we would have contracted that out to somebody to do. So when you say it's in draft, it means it needs to be altered, in what way? shape, or
Well, it sits with Paul, and unfortunately he's not here today to answer that question, but we can certainly get the answer to that question and come back to you.
I just feel that that probably should come to risk and audit, even in a public excluded workshop to some, or not necessarily workshop.
I agree. I would have thought it was set up a social license to operate and reputation. That so document is important as that should be in there.
It is reputation and it's really important to us.
Yeah.
But it's important to council.
If you read the description impacted, whatever it is, it kind of covers off elements of that report.
But could I just reflect a couple of things here, Collins? Look, thank you for raising it. I want to reflect, we don't directly have strategic risk called reputation. I think that's really the point Jan's making. I think certainly the way I look at it, I don't think any of the committees on directly have reputation per se as a strategic risk. Any of these matters, if we do not manage well, and if we don't follow, and I agree with Martin's injunction, where's the action we don't act on, leads to loss of trust and confidence in the community, leads to reputational damage. So I tend to think of it in that way. And most councils would say, when they start saying, well, what risk, what tolerance can you have for this risk being managed? So, and some of the dimensions that you would think of in terms of managing that is how much, people talk about the front page test. How long would I be prepared to be on the front page from a reputational point of view, negatively, over a particular matter? And that's going to determine how closely you manage or run a matter. So it is an important part of the framework, but the reason for the perception survey to come here, and we could perhaps agree that, but it wouldn't be directly because it's dealing with a strategic risk.
All right.
We'll pick
Where
it up.
would that normally be going to? Would that be normally going to full council, Jan?
I think normally it would go through strategic working committee as opposed to coming through.
Yeah. I would think, Colin, that it goes through what was the intended approach. If there are matters that are raised from it that affect our risk profile or environment, and we've got these strategic risks here, I would welcome a committee or council to refer it to us to consider.
Yep.
Okay. Thank you for that. So thank you again, Matt.
Can I just ask a quick question? Am I not right, Colin, in thinking that report has conventionally been released at the same time as the annual report?
No.
Not. They generally haven't been released together. They've been a separate perception survey at the same time. Yeah, sorry, not at the same time. Yeah. In fact, the annual report has been generally December, traditionally in the past, whereas the residents' perception survey has been midway through the year thereof.
Okay, thank you for that, and thank you for your questions and engagement. That's really good, Matt. Thank you again. Swimming pool audit update. Hi there, Sarah. Welcome.
Hi. Okay, so since our last report, I have made contact with the 59 pool owners that had outstanding inspections. We made contact either by email or post, and informed them of our intention to inspect their pool by the end of October. So our usual process is to provide a date and a time for an inspection, but because these ones were outstanding, we chose to just say we're going to come to your property at some point in the next 2 months. That meant we could then fit the inspections in around the other building inspections that were happening. We have had a small number of people that have pushed back, don't want us on their properties for various reasons, and we continue to correspond with them to try and get onto their property without having to take the next step, which would be engaging with the police and getting them to the inspectors onto the site. That's it at the moment.
Thank you. It's sometimes a difficult role being a regulatory authority, and the comments you've included here, and thank you for those, Sarah, just reflect sometimes the challenge of what it is to be a regulator. So thank you for that. It just gives us an insight. Folk, do you have questions or comments? We had asked for this report back to understand where things were at. It's a matter of legislative compliance, but it's also a matter of human safety, which should be of interest to us as well. Are there any comments or questions here?
Just one from me, Bruce. Yeah,
Yes,
Sarah. Yeah, just in terms of inspections and those that are actually pushing back, Sarah, they ones that council would have endorsed and signed off on when they were originally built, or are these new pools that people feel they have a right to ignore council's requirements?
No, so they are older ones that have previously been consented and signed off.
Right.
And so they're of the opinion that you've already signed it off. Why do you need to come back?
Okay. Thanks.
Oh, could I just ask them, so how often are they checked?
Once every 3 years.
Every 3 years, at least, yeah. Oh, okay.
This is a challenge around the country, Kay, and I'm appreciative of staff picking this up and trying to deal with it. But you can get behind so fast, even on a 3-year cycle. So I think it's a merit to staff that they're trying to pick up and effectively get your cycle back up and running. Is really what I see out of this, Sarah. Am I correct in that?
Yes, that's correct. Yes.
Yeah. So it is just us as a local authority, as a regulator, trying to do our regulatory tasks. So well done, guys.
You put the pool in and you've got initial consent, though, you know that every 3 years you're going to get inspected. It's part of the deal, right? This is not.
Yeah, so the legislation came in 2017 for the 3 yearly inspections. Yeah. So it's generally people pre that. Yeah.
Sort of understand it in a way.
Sorry?
I sort of understand it in a way.
Wish I had moved the pool.
Oh, gosh, you've got to check them.
Yeah.
I think the evidence would show that pools are unfortunately at the wrong end of statistics in terms of drownings. So, I think that's if I recall correctly, Sarah, the sort of the rationale for this. Sarah, is there any? Thank you for the advice and the update, and I think it's important as a committee we totally endorse the actions you're undertaking. You're required to. We're a regulator. We need to do it. It's there for good public safety reasons. Per se, is there anything further that you need from us at this point?
Not at this point, no.
No, okay. Well, look, thank you for that. It's good to keep that up. It's somewhere down the track. It might be useful for us to know where things are at. It's clearly not the easiest task, even if it's only even if you are given the 4 out of the 59 that are shown a point of resistance. But if you need to bring stuff back, can you please do that? We would love to support you. Thank you.
Well done.
Yeah, I do too.
Yeah.
Sorry, I didn't hear that.
I just appreciate
Yeah.
Sarah's work in this area. Yeah.
Oh, okay. Yes, thank you. Yeah. No, appreciate that. Thank you, Sarah. Appreciate your time and indeed your reporting. That's really good. Can we move to item 11.5, which is the people report?
Cool. So this is the standard information report on people. There is a new risk included, so around length of service, with just over half the workforce having been at the council for 2 years or less, which is quite different or unique in local government. There's obviously a lot of risk around that in terms of corporate memory and such, so staff retention is a really key one which we need to focus on. People and Culture is working on strategies to enhance the employee experience by streamlining processes starting from a recruitment phase to onboarding and induction, and we'll be conducting an engagement survey before the end of the year. In terms of leave liability, managers are working with staff members with excessive entitled annual leave, which includes submitting leave plans. This is again overseen by the lead advisor for People and Culture and reported monthly to SLT to make sure we're on top of that. In addition, recruitment continues to be a main priority with 8 roles under recruitment as of 30th September, and we had 4 new permanent starters last month. Just to note, in terms of the dashboard, it includes the 4 casual SUPS project staff, which will distort the figure slightly. Welcome. Any questions?
Thank you for that. That's very, again, very interesting. And I appreciate you pointing out there is a new and a very interesting risk there around length of service. If I look carefully, it's 69, but less than 5 years in an organisation. That's a substantial need to build capacity, not sort of wanting to speak down to people like you say yourself, say Jan, who bring incredible local government experience in, but not in the South Wairarapa context, although I suspect that's growing rapidly. So I appreciate that. Do we have questions or comments people would like to make?
Just have one question, Bruce, through you. Matt, just in terms of numbers of staff that has come up, and I know we're currently sitting at 90 with 59 full-time, 17 part-time, fixed term, I guess this people fixed term contracts and casual 10. Are any of those staff currently subsidised through government incentive activities, or are all their staff? Jan's might be.
Some of them are funded externally.
Yeah.
So Welcoming Communities is external, I believe. The
Youth is
externally funded.
Coordinator is externally funded. Yeah. The funding advisor is externally funded. Not sure about others.
And transitions.
Oh yeah, we're getting some transition support from the government around the work we're doing on local water's done well.
Yeah.
And the casual number will include the 4 casuals that we've got on at the moment for the data integrity project. And
sorry, for what project?
Data integrity, the SUP check.
Oh, SUP checks, yeah. So there's 4 there, is there?
4 in there, and they're only on a short term, so they'll be gone in a couple of weeks.
Yep. Yes, great. That's one of the things we do get asked.
Yeah, because I think we're really sensitive to it as councillors, because it's one of the things that we get attacked about all the time.
That's that 90 isn't big enough to do everything that you have aspirations to do, but
So just in terms of numbers, when you first started as against what we've got now, because I recall a number of around about 75, I think, would that be correct?
So it depends on whether you're talking about FTE or number of staff, and this is another area. Yeah.
You mean full-time, don't you?
No, total number of staff, including FTEs, and including part-time, casual, etc.
Oh, but isn't the full-time aspect irrelevant? Rather than.
Well, no, we've got a figure here of 90.
Yeah.
I'm saying 12 months ago that figure was around 75. So that's my question.
Yeah, but if they're on less hours a week, if they're part-time, it might add up to the same number of full-time.
Okay, well, work on FTEs. So let's work on FTEs.
Yeah.
Are we pretty close to the numbers of full-time FTEs as we were 12 months ago? Or have there been significant changes?
I wouldn't say there's significant changes. There have been changes.
Yeah.
I mean, you approved 2 additional library assistants as part of the annual plan. Obviously, we brought on the project manager under the same heading. We brought in the legal exec on the basis that it will reduce our costs with having to deal with high-priced lawyers when we need advice. So there are positions that we have brought on that are addition to what you had before. But I certainly don't think that we've added 15 FTEs in the last 12 months.
So I think that's what I saw.
But, and also some of those lower salaries, some of the new people brought in were some of the lower salaries than the vacant positions that we had, which we had previous people at higher salaries. Wasn't it?
Yeah, so we've
SLT.
Yeah, well, yeah,
Reduce the number.
yes, reduced number of SLT.
SLT's been reduced by 3, and obviously we've broadened that span underneath.
Yeah, it's good.
So you will probably see more numbers, but the cost will not have changed significantly. It would have changed, but not significantly.
Yeah.
Yeah, I have a problem if the job needs to be done in some do it. Do it. I'd never see to do the work of 3 people. That's you know. But that's what we do.
I'll take the week off. One of your 3 people can have the week.
Yeah.
You did make the comment so that 90 sometimes not enough for the aspirations we have. So the aspirations we have as a small council.
Which is the aspirations that we had. That was different.
High for a low rate paying, or in some cases.
I think some of the things that you want done quicker, we can't do because we don't have the bodies necessarily free at that point to do them. I just think back to the conversation we have about, you know, asset utilisation. That would be great to be kicking into that with some real vigour right now, but until we've got an asset management process and an asset manager, but the information's not necessarily all in one place to do that. So we have to slow the process down sometimes because we don't have the breadth of resource. I mean, Charlie went to a team the other day that had got as many in the finance team as we've got in council. So, you know, when you're looking at it that way, we have single point failure in a lot of our positions.
Yeah, and I accept that, yeah.
Martin?
Oh, sorry, go for it, Kay. And the,
Martin. No, Martin was.
Oh, you're pointing out Martin. Sorry, Martin.
Yeah, thanks, Bruce. I also think it's one of those areas where it's very easy to get, I suppose, misled by raw numbers. So, I mean, if, for example, we were like Carterton, but we employed our own ground staff and our own water engineers, etc., we might well still be doing exactly the same sorts of things we do as a council, but we might easily have 35 more staff in order to do it. The number of staff is probably quite a poor proxy for some of the things that, if you like, I know what I think Councillor Bosley is saying, that, you know, that some of the things that our residents get a bit agitated about. I mean, the thing that I usually respond to some of these people who want to tackle me on the same issue is so what is it you want us to stop? And usually the conversation moves on to other things quite quickly at that point. And it really doesn't, if you want whatever the goods or the services are we provide, whether we have somebody like Charlie producing them or somebody like Fulton Hogan producing them, it's all going to cost. It's just a question of, did you want it?
Yes. Yes.
Can I, sorry, can I ask oh, sorry.
No,
no, please go, Kate. No.
Oh, okay. Well, yes, I was going to say, I think it's a shame because I think we have to report that number of the part-time staff, don't we? Because I think that leads to a lot of confusion. And yeah, I think you're right. It is very complex because, you know, if we've got a larger number of staff or a smaller amount of pot of money, yeah, that's not obvious there either too. And also the number of vacancies that there were before it was compared at that point in time. So yeah, I think just all these things need to be pointed out to people, that you can't just look at that number and jump to that conclusion because it's bigger.
Clear. I mean, I'm not unhappy about the way that's been presented to us, because quite clearly there are 59 full-time staff, but that's why I asked the question about how many of those staff or some of those casual staff are externally funded.
Yes.
And so I got that answer. You know, I'm not jumping up and down waving my knickers in the air or anything like that.
No, but I'm saying when the public
Would you not? Anyway.
say.
I would prefer not.
No, but when the public say, oh, there's more staff now than there was before, I think,
But it's good having these conversations in a public forum, for instance, which this
Yeah.
meeting is.
Yeah.
So that the public are aware.
Yeah.
Yeah, I think the mayor's response is actually quite a good one, you know, which is,
Yeah.
what do you want us to stop?
Yeah,
You know?
yeah, I think what Martin said was relevant. Yeah, what do you want us to stop?
Right, thank you. I'm conscious that we may be not straying from topic, it's all relevant, but I do appreciate that. And again, thank you for this information. And Jan, thank you for sharing particularly a key area that you have direct responsibility for. So as the chief employer of all the staff, it's grateful, and I'm very interested to understand the risks that you're managing. And again, would love to be able to see this continuing, this reporting. Perhaps really the question might be, are we able to see some comparatives? But I'll let you think through what are the nature of the discussion we've had today, and whether there is other information without it taking a significant amount of time to develop, which might just create the full picture, which is great. Can we move to 11.6, please, which is the health, safety and emergency management update?
Wonder if we could stretch our legs for 5 minutes. It's been 2 hours on my backside. And,
Oh, okay. Oh,
Yeah.
sure, it's a good idea. Yeah, it is a good idea. You're right. I've been sitting for 2 hours. Should we take it? I'm just conscious of roughly the
Is that our
time.
statutory
Can we
requirement?
keep it a tight 5 minutes, please?
So Chris, just through you, so it's either 10 minutes or you resolve to have another extension of the meeting. So it has to be at least a 10-minute break.
it's a
Sorry, just to
statutory
be-
requirement.
Yeah.
So I didn't quite catch that. Do I have to make it a 10-minute break, do I?
Well, it's 10 minutes as per the standing orders,
Oh, okay.
unless you
fine.
resolve something different.
Okay, if it's 10 minutes, we better make it the 10 minutes. I'm not bound by 5 o'clock, but I am keen that we keep ourselves to a
If you've got
close
90
time.
staff, I want to know where you put the mezzanine floor. Are they all? I mean, how did you get all squeezing them in?
Oh, yeah.
Hey?
Hide them.
A bit.
Oh,